Hey Nick, so your homework will be to find more ICI's examples within the structural range. So basically what we did in the session, but just better and with more understanding. So again, showing you the schematics of the ICI, and because it represents in different ways. So as you can see, you have the structural range and then impulse correction, impulse correction, and on the impulse you enter here. So you just see how they look, how they are looking like, and then I will show you once again a live examples right now on the price. These are more variations. So even though this is a bearish impulse here, you have some build up to the bullish side and you assume that the high time frame is bullish. More examples, more examples. And now these are schematics for the entries that are not so good quality. So for instance, when the impulse is so extended, it's visual extended, or in the other ways overextended that I will show you a bit later, but now it's just visually. So really big impulse, correction impulse. Here you are entering to the bullish side after a huge bearish impulse. Not good. Here the entry is inside a really choppy market. Again, not good. And here the market is just volatile, and it's again not a good condition to enter. So as you can see, I'm trying to have some introduction to the quality of the patterns, and don't try to dig too deep right now. Just use these visual examples and use your eyes to the best extent that you can, and I will provide feedback more. Now let's take a quick look at screenshots and some examples from the price. Again, you see some bullishness here, and then impulse, correction, and impulse. Here you have also impulse, correction, and through the top there is an entry. So impulse, correction, and enter through the top. This one. So you have, as you can see, bullishness from higher time frames here. Then market starts to build itself up, and you have impulse, correction, and impulse. And by the way, you mentioned about sitting in front of the computer. If you're entering on higher time frames, imagine this is 30 minutes as you enter time frame, then you're just placing some alerts, for example, alert for a break, and then just check your phone or computer once in a while. And then you just set a buy stop, and then you walk away. So it could be matched. The thing is here is to understand the overall approach, and this is just a small part of it. One more example, as we saw on the schematics. So bigger impulse, some kind of accumulation here, ranginess, and then entry pattern. Impulse, flat correction, and entry. Same situation, market is moving to the downside, bigger impulse, and here we have impulse, flat correction, and on the break, stop loss can go here, here, here as you want. The thing is, you will test it and see what works best for you. Because on the test, you will have statistics of how much your trade ran against you before going to take profit. And if you will see that many trades just do not run even to half of your stop loss, then actually what is the sense of bigger stop losses? More examples. Some kind of bullish foundation, impulse, structural pullback, and then impulse, smaller correction, clean correction, and through the top. Impulse, correction, through the top. This one is a little bit different, yes. So you have this impulse, top of the impulse, correction, and on the break you are buying it. And this one is pretty classical. So you have bearish foundation here, bigger impulse, clear price action, and then impulse, flat correction on the break. So entry was on this impulse, correction, impulse. Let me zoom in. So impulse, correction, and on the break. Here later there was another possibility here. So we have a break, impulse, and you have impulse, correction, break, impulse, correction on the break. Stop loss goes here, here, here. Now I will show you some examples that are not as good. So these are examples that are not as good. This one overextended. It's just visually. Usually after such breaks, market tends to go into ranginess or pull back deeper. This one is a bit too loose. I mean, it's like 50-50. Usually what we like to see is some tightness. So something like this, you see, impulse, then tight correction. But here we have this loose market. This one again, like to extend it, only one candle, it's pretty big. And overall the entry is a bit too late after the break. This one is just inside the really rangy price action. So we have rangy price action, which is better not to touch. And overall we had before this bullish push, but again the market is just not that clear. You do not need to think too much about the clarity in the homework. I'm just explaining you examples. And this one is actually fine. I even don't know why I put it in the folder with bad quality entries. This is a classic explanation of entering in the rangy, unclear, messy, wiki market. So whatever side you choose, this is not good entries. It's just very bad markets. Here the ICI maybe is not so bad, but we are entering to the bullish side after really bearish price action, so there is no foundation to this entry. This one is just too rangy and lacks direction. This entry is choppy and wiki environment. This entry is a bit extended, so we have 7 consecutive, as you can see, 7 consecutive structural breaks to the upside. And even though the ICI is almost perfect one, so this is basically a perfect pattern, but it is too high. And as you can see, there were some opportunities like here on this impulse, correction and impulse, or maybe somewhere here. But here it's a bit too late, even though it worked out. This is an example that you maybe remember from the schematic. So a big impulse to the upside, a big impulse to the downside. Yes, there is some kind of impulse correction impulse, but overall not that clear. Again, an example of rangy, wiki, unclear markets. This one is too late for entry. The move already happened. So again, I'm going fast. You can pause and see better. So the setup itself is not maybe too bad, but in overall it's a little bit too extended. This is a situation where we are trying to predict the bottom. So the market is just moving to the downside. Entering basically just because it's over extended here is not a good enough reason. And overall ICI is not good. The impulse is too extended. Again, it's not the worst situation because you are still trying to follow the market, but it's a bit extended. And now we are moving to what your homework is looking like. So again, you just play the price in hindsight and find some examples of possible ICIs to enter. They could be higher quality, lower quality, or you can just show them and comment on how you see based on what I described. So as I see it, we had, and by the way, when you will turn on the structure indicator, which you will find description in the videos I sent you as homework, you will have these lines. They are showing structure based on impulses and pullbacks. So here, and you just need to use one time frame and show the entries. So we had bigger impulse, pullback, and then this fractal impulse, correction, and possible entry here, which is average quality in my eyes, because yeah, it's just the impulse is wiki, the pullback is one candle, and that's all. So it worked in hindsight only. I will show you now more better quality examples. So here we have a market that is moving to the downside for some time. We had this bigger impulse, then this rangy price action, and then impulse, this flat correction and impulse. So the pattern in itself is very good here, but the overall situation is average. And again, I want to remind you that this is only one entry pattern type. It's there are some others that you can use, and I will show you later. So this one is pretty classical. So you have bigger impulse, impulse correction, and on the break there could be an entry, something like this. This one is pretty interesting. So overall market that is moving to the upside, clear overall structural impulse, then pullback, and then smaller impulse correction through the top, and through the top of this impulse and this impulse there is a buy. There is a position, but this one required bigger stop loss. But again, this is just hindsight research, and sometimes the impulses will be ICI patterns in themselves. So for instance, this one, like impulse correction, bigger correction through the top with one more impulse correction impulse. So this one is a bit more complicated. Okay, and last one, or last ones, bigger impulse structural, then smaller impulse correction and impulse. So again, we are using only one time frame right now. Break from this low to this high, pullback, and then impulse correction. So let me zoom in. Impulse correction, and on the break there is an entry somewhere here. Okay, so hindsight research, this is your task. Any questions, let me know. Bye.